Welcome back to Pi Uncut, where we decode the markets, break the noise, and give them the clarity behind every major move on Wall Street. Today, we're diving deep into one of the most dramatic tech stories of this year, AMD's worst monthly performance in more than 3 years. If you're wondering why the stock has fallen nearly 23% in November, this episode will walk you through the pressure points, market psychology, competitive threats, and, most importantly, what it means for long-term investors. The setup, how we got here. Just a few weeks ago, AMD came out of its investor day with optimism. Management outlined its most ambitious roadmap yet, projecting the data center total addressable market hitting $1 trillion by 2030, and signaling confidence around its AI accelerators, rack scale systems, and the long-awaited Helios platform. But then the sentiment flipped, and it flipped fast. Despite all the bullish presentations, investors are now struggling to reconcile one big truth. This is not a normal competitive cycle in semiconductors. This is an AI arms race, and every quarter counts. So, let's break down what triggered the meltdown. Reason 1, a classic weak hands shakeout. According to market commentary captured in the article, AMD's rise and fall immediately after Investor Day signals the presence of momentum-driven investors, traders who bought the hype and sold at the first sign of volatility. As Mizuho analyst Jordan Klein puts it, the sharp reversal revealed a lot of weak hands, meaning short-term holders who quickly exited once the stock stopped trending upward. This is typical in high-beta tech names. They surge hard on narrative, they fall even faster on doubt. And AMD, despite its strong fundamentals, sits right in the crossfire of these fast money flows. Reason 2, macro pressure. Interest rates continue to cast a shadow. This isn't just an AMD story. The entire tech sector has seen a downturn as Wall Street grows uncertain about the Federal Reserve's December rate decision. Why does this matter? Because higher interest rates make future earnings less attractive. Growth stocks, especially those aiming to scale big in 2026, 2027, 2030, take the biggest hit. AMD is one of them. So even before we talk about AI competition, macro conditions alone have added weight to the stock. Reason 3. The surprise spike in memory prices. One underappreciated detail in the article is the rising cost of memory due to supply constraints. For AMD, this creates two challenges: higher input costs for PC makers and potential drop in consumer PC demand if OEMs raise prices. AMD's consumer PC segment has been one of its bright spots this year. But if memory prices keep rising into 2026, that momentum might slow down. Wall Street is forward-looking, and this risk is being priced in now. Reason 4, the OpenAI and AMD partnership now met with new doubts. One of the biggest catalysts for AMD earlier this year was its collaboration with OpenAI, a massive commitment of 6 gigawatts of AMD systems planned for deployment starting in the second half of 2026, powered by the upcoming MI450 chips. Investors love the deal, but now there's a twist. Why? Because signs show OpenAI's growth momentum may be slowing down, particularly in daily usage and downloads. Klein notes that this slowdown may be creating second thoughts among investors about how much compute OpenAI will ultimately require. When you're investing in AMD because you believe in the OpenAI partnership, any cooling demand from OpenAI becomes a red flag. Reason 5, Google's big comeback, Gemini 3 and the TPU factor. Possibly the biggest curveball this month came from Google. Alphabet released its new Gemini 3 AI model, claiming better performance than ChatGPT 5.1 and Anthropic's latest Claude Sonnet model in several categories. This wouldn't be an AMD problem, except for one thing: Google's Tensor Processing Units, or TPUs. A new report says Meta is considering using Google's TPUs in its data centers. If Meta, one of AMD's symbolic AI partners, starts diversifying into TPUs, it could reduce demand for AMD's Instinct accelerators. This news rattled investors hard enough that, on Tuesday morning, NVIDIA dropped over 6%, AMD dropped over 9%. This wasn't just a dip. This was fear, pure and simple. Why fear? Because if TPUs go mainstream beyond Google, that breaks the assumed duopoly of NVIDIA versus everyone else, and AMD needs every big customer it can get. Reason 6, analyst reactions. From caution to confidence. The article highlights two major analyst viewpoints. The cautious view, Bernstein's Stacey Raskin points out that AMD's long-term story hinges on Helios, its rack scale offering, and whether AMD can truly scale into hyperscaler deployments. He questions whether investors will remain confident in AMD's 2030 targets if Google dominates the AI race and TPUs gain wider adoption. The bullish view, Wedbush. On the other end, Wedbush's Dan Ives maintains AMD as a top 10 AI stock to own, calling today's fears an overreaction. He compares this moment to 1996, not 1999, meaning tech is at the start of an adoption curve, not the end of a bubble. This creates a unique split in Wall Street opinion. So, what is the real reason behind AMD's meltdown? Let's strip out the noise and summarize the core issue. AMD's story is no longer about CPUs. It's not even about GPUs. It's about timing in the AI arms race. Right now, investors are worried that Google is accelerating faster than expected, Meta might shift compute purchases, Nvidia is still the default AI winner, and OpenAI may not scale as fast as predicted. It's a perfect storm. But the meltdown isn't because AMD is failing, it's because expectations were sky high, competition is brutal, and the narrative shifted almost overnight. Where does AMD go from here? As a long-term investor, here are the real questions to ask. 1. Can AMD land more hyperscaler wins? If Helios gains traction, AMD could carve out meaningful market share. 2. Will Instinct MI350 and MI450 chips compete with NVIDIA's lineup? The MI300X has gained adoption for Meta's Llama models, but does that momentum continue? 3. How real is the TPU threat? If TPUs remain mostly Google-centric, AMD is fine. If TPUs go mainstream, the whole AI compute landscape changes. 4. Can AMD turn the 2026 to 2030 roadmap into revenue and not just slides? This may be the biggest unknown. Final take, the pie uncut view. AMD isn't broken. The stock is reacting to fear, not fundamentals. Yes, the competition is fierce. Yes, Wall Street is spooked. Yes, rate uncertainty is pressure. But AMD is still partnered with hyperscalers, shipping competitive accelerators, expanding into rack-scale systems, positioned for the trillion-dollar data center opportunity. This isn't a sell-and-run situation. It's a volatile moment in a long-term AI race. If you're a long-term believer in heterogeneous compute, CPUs, GPUs, custom silicon, AI accelerators, AMD remains a player you cannot ignore. The stock may face more turbulence in the coming months, but history shows these periods of fear often precede the biggest opportunities. And with that, we wrap up today's episode. This is Pie Uncut, helping you think smarter, invest deeper, and stay ahead of the markets.